Meantime, President Trump confirming 25% tariffs on Canada and Mexico will go into effect tomorrow. The news sending the EWC and EWW ETFs tracking the countries down more than 1%. Our next guest says the tariffs could be costly for the U.S. economy and GDP growth. Let's bring in Moody's Analytics chief economist, Mark Zandi. Mark, great to have you with us.
Good to be with you.
So it's no longer just inflationary. We're going the next step, inflationary and the impact on growth at this point.
It's not only about the tariffs. It's about DOGE cuts, and it's about what's going on with the potential government shutdown. It's about the Treasury debt limit. It's a whole range of things that are adding to the uncertainty. I think it's weighing on business investment decisions. Consumers are getting nervous. You can see it in the sentiment surveys. And now investors are getting nervous, which you can see in the stock market and in the bond yields coming back in. So I think there's just a high level of angst, and that's starting to weigh on things. I don't think people are pulling back. That would be obviously a recession, but they are beginning to become more cautious, sitting on their hands. Almost just like the Fed. The Fed's saying, hey, look, I'm not going to cut interest rates or do anything with policy until I get better clarity around economic policy. I think that's kind of the attitude of businesses and consumers more broadly, and that means the economy is starting to really throttle back here. It just feels very increasingly fragile to me.
Have things changed enough for you to see Fed cuts this year?
We could, yeah. I mean, in my baseline before, if you go back a couple of weeks ago, we have 2 rate cuts, one in September, one in December, thinking that the higher inflation would keep the Fed on the sidelines, and then weaker growth later in the year would cause the Fed to cut. But, if the economy does start to weaken here more than I anticipated, it does feel like it's going in that direction. Obviously, a lot depends on the administration and what policies they pursue here. But if the economy does weaken, then, yeah, the Fed would be cutting rates sooner in an effort to keep the economy up, despite the inflationary pressures that are developing because of the tariffs. So it's a tough spot for the Fed, right? What do they do with this? I mean, do they raise rates because of the inflation and the effects on inflation expectations, which we can see, or do they cut rates in response to the weaker economy? And that's why this is so difficult for the Federal Reserve and why it's so tough on the economy.
Hey, Mark, it's Tim. And the sentiment around confidence, and this is something that Karen referenced, it sounds to me this is also weighing into your uncertain view. But I'd like to go into the job market. So we got a huge payroll number on Friday. And if you think about what forced the Fed to do 50 when it came out of the gates, that at least a lot of people afterwards, and at least as we got into this year, said, boy, that was too much. But the job market really is what this is about. Can you weigh in on what you're expecting here? It's tough to feel that the job market's going to fall out of bed overnight. But it might not take a lot.
Yeah, I don't know that we'd see this weakness show up in the job numbers for the month of February, which is what we're going to get on Friday. It just feels a little premature. I mean, sales are weak. Home sales are down. Retail sales are down. Manufacturing production is down. Unemployment insurance claims are starting to push up, but it feels a little premature. So if you told me, Tim, we got another 150K this month in this data, I'd say that sounds about right. And that'd be consistent with stable unemployment around 4%. But another month of this uncertainty, if we're in the same place 3-4 weeks from now as we are today, and people are trying to grapple with all the things that are going on with regard to tariffs and DOGE cuts and everything else, and by that time, we've got a government shutdown on our doorstep, I do think we'll start to see it showing up in the labor market. We'll see more layoffs, and we'll see less hiring, and we'll see weaker job growth.